The Gold Coast has been one of the most talked about property markets in Australia, and one of the most misunderstood. Prices have done something that surprises a lot of people when they look closely. Today we break down what just happened to Gold Coast property, why the market behaved the way it did, and where it goes from here. Let's start with the headline. The Gold Coast has experienced powerful price growth over recent years, with house values in many areas rising dramatically. The city has transformed from a holiday and retirement destination into a serious permanent population center, and that shift has driven the market hard. But here is the crucial nuance that the headlines miss. The Gold Coast is not one market. It is really two very different markets moving in different directions, and understanding that split is the key to everything. First, the force that drove the boom. Migration. During and after the pandemic, enormous numbers of people moved to the Gold Coast permanently, drawn by the lifestyle, the climate, and the ability to work remotely. People who once would have only holidayed there decided to live there full-time. At the same time, Southerners priced out of Sydney and Melbourne saw the Gold Coast as relatively affordable with a far better lifestyle. This wave of permanent migration collided with limited housing supply, and prices for houses, especially, surged. Now, the split that defines the market. On one side, you have detached houses, particularly in desirable suburbs near the water and in the leafy hinterland fringe. These have performed extraordinarily well, because they are genuinely scarce. They cannot be easily replicated, and everyone moving to the Gold Coast wants one. On the other side, you have the apartment market, especially the older high-rise towers in the central tourist strip. This part of the market has behaved very differently. Some older apartments have struggled, weighed down by rising body corporate fees, building maintenance and safety costs, and a constant supply of brand new towers competing for buyers. So while a Gold Coast house might have soared in value, an older apartment a few streets away might have barely moved, or even fallen. This split carries a powerful lesson that applies everywhere in property. Scarcity drives value, and oversupply destroys it. The scarce, hard-to-replicate assets, the houses and the land, captured the growth. The easily replicated assets, the towers that can always be added to, lagged behind. Buyers who understood this distinction did far better than those who simply bought anything on the Gold Coast assuming it would all rise together. Let's talk about which areas are strongest. The premium waterfront and beachside suburbs have led the way, as the wealthy and the lifestyle migrants compete for limited prime real estate. The hinterland behind the coast has also surged, as buyers seek space, privacy, and land within reach of the beaches. The weakest part of the market remains the older, investor-heavy apartment stock in the most crowded tourist areas, where oversupply continues to be a drag. So where does the Gold Coast go from here? The honest assessment is that the easy, explosive growth of the migration surge has likely passed its peak. The city has absorbed an enormous wave of new residents, and prices have risen to reflect that. Future growth is likely to be more moderate, and far more dependent on which part of the market you are in. Scarce houses and land in good locations should continue to hold up well over the long term, supported by the Gold Coast's enduring lifestyle appeal. The apartment market will likely remain a tale of winners and losers, where quality and building condition matter enormously. 3 takeaways for anyone looking at the Gold Coast. First, never treat it as a single market. A house and an apartment a few streets apart can have completely opposite prospects. Second, favor scarcity, houses, land, and genuine waterfront, over easily replicated high-rise stock. Third, if you do consider an apartment, scrutinize the body corporate fees, the building's age and condition, and the supply of new competing towers nearby, because these factors will make or break your return. What just happened to the Gold Coast is a story of powerful migration meeting limited supply, but split sharply between the scarce assets that boomed and the abundant ones that lagged. Understand that split, and you understand the Gold Coast. If you found this useful, hit subscribe, because we break down a different Australian property market every few days. See you in the next one. It is worth understanding the deeper reason the Gold Coast has become a permanent city rather than just a holiday strip, because it changes how you should think about its future. For decades, the Gold Coast economy lived and died with tourism, which made it vulnerable to every downturn in travel and every shift in the dollar.